Good morning, everyone, and welcome to the European crossover webinar. And we're seeing a relatively slow August trading day. We see the euro going in pair back. We had discussed yesterday in the chat room. I posted this chart, this 1228, and I thought the market would have a tough time trying to get beyond that. Now, our bias chart had been resistance had been at 1211, but when we got past here, and certainly it was 1211 because we had been working lower throughout the early part of yesterday's session. But is that okay? We're gonna have a tough time getting past 1228 in light of what everything was happening, kind of like a risk-off type attitude. Um, so I thought it'd be tough to get beyond that. Now we were settling basically in the 12 teens, but we've seen the market continue to go on and slip here down to 1190. So it's basically the old two steps forward, one step back, and obviously a lot, I believe, has to do with, again, you can see here with bond yields, new all-time lows again. But if you look at the 10-year yields, you see going towards the lows, but we don't have new lows yet. But they're definitely going to the lows. But look at the bonds, new all-time lows again. So we've mentioned that. I mentioned that yesterday on the daily roundup. It still remains the ball and chain. So it's tough for the euro to advance. Everybody's thinking, okay, we're going to break hard. I myself, like I said, thought, I like the euro. I'm bullish on the euro, but it's going to, when we got to that 1228, that's what I posted. It's going to have a tough time trying to get beyond there with the different risks off. And so now, okay, now it's a new day, but now we got bonds at new all-time lows, and 10-year yields aren't at all-time lows. So once again, that drag continues to weigh on the euro. Now look at gold. Gold continues to go on a motor higher here. We'll go on and get back to the main screen. Crude oil just kind of flat, to say the least, after decent little bit of a rebound after this big time sell-off, big time, and this $8 sell-off. Come back. Looks like we're just beyond the 38% at this point. Let's go on and go back to the main screen. And you can see the dollar here just kind of fiddling around here in a very tight range. I mean, after a dip yesterday and kind of coming back, we're just kind of just marking time, treading water. Cable did go and move. Well, initially it started to move higher. This is on those reports that the lawmakers, we talked about that yesterday, had were looking to potentially fashion something to delay or delay the Brexit. Then also Boris Johnson came out and said something that he was, if something could be worked out, it would be good. And that certainly provided a bounce here. Of course, the dollar yen continues to wane near these lows. Even the bounces are feeble. Look at this. And we know yesterday we're doing okay, not great, but we're holding around here. But then the Hong Kong news broke about them with the airport, telling people not to come to the airport and all that. And then also China was reportedly sending some military to beef up areas, and that just sent the dollar yen just going lower. And we tried to recover a bit, but not very much. We're just still trying to slide right back again. So Australian dollar remains weak. And I'm sure in this case here is going to be the same for the sister currency, the Kiwi. It certainly is. Dollar CAD is kind of holding its own a bit here, kind of making this move back up after trying to find support. We actually had it down to 31.77. We thought we might even slip a bit further, but market's kind of held its own and trying to push back up. And also the peso has kind of like middle of the road net. We know about the central bank meeting and potentially this thing can move higher, and it did take off and ran up. Came back down here. We had 1947, which was previously resistance, was now support. We didn't quite make it down there. Looks like we got down to about 1953, and we're a little bit higher now. But that's going to be the one thing that people are going to be focusing on. With that, we'll go on and take a look at the news, which is somewhat sparse. Australian New Zealand dollars pressured as yields keep falling. The Australian and the New Zealand dollars were fighting a rearguard action on Tuesday as investors shunned risk assets and bond markets flashed red on the risk of world recession. The Aussie dollar was stuck at 67.60, having shed a 0.5% overnight as the global mood soured. It did find support around 67.50 ahead of the recent decade low of 66.78, while resistance looked tough at 68.22. The QE hovered at 64.53, having failed at 65 cents, though it held above last week's 3.5-year trough of 63.78. Both currencies were pressured as disparate events, from protests in Hong Kong to a crash in Argentine markets, kept investors on edge and drove yields even lower. Yields on Australian 10-year bonds touched another historic low at 9.16%, taking them further off the overnight cash rate of 1%. Reserve Bank of Australia Governor Christopher Kent noted that the local yields had fallen further than in many peer nations to put downward pressure on the Aussie as intended. The central bank has long hankered after a weaker currency to help support exports and services such as tourism. At a 2-year horizon, this interest rate differential has declined by about 100 basis points over the past year, Kent told an economics event in Sydney. The low return in Australian assets would no doubt have contributed to a decline in the value of the Australian dollar. Ken also said it was unlikely the RBA would need to resort to unconventional monetary policy, though it would be possible if ultimately needed. Markets have already priced on 2 further quarter-point cuts to 0.5%, and even the chance of a move to a quarter by the middle of next year. 3-year bond futures were up a shade at 99.355, implying a yield of just 0.645%. The survey of businesses from National Australian Bank underlined the fragile state of the domestic economy, with conditions and confidence below average in July. We expect a further ease in interest rates in the RBA and think that some greater fiscal support will be needed from the government to kickstart growth, said NAB Group's chief economist Alan Oster. Investors are wagering that the RBNZ will have to go even further. It's as it surprised everyone last week by cutting rates by a steep 50 basis points to 1%. And yen near a 7-month peak versus the dollar. Hong Kong and Argentina lows fan risk aversion. The yen traded close to a 7-month high against the dollar on Tuesday as unrest in Hong Kong and gyrations in Argentina's markets heightened investor risk aversion and fan demand for the safe haven Japanese currency. The yen was at 105.49 after brushing 105.05 overnight, its strongest since January 3rd. The Japanese currency, which attracts flight to safety flows in times of market turmoil, has been on a solid footing this month, supported by factors such as U.S.-China trade tensions and the prospect of further monetary easing by the Federal Reserve. The currency has received a fresh boost by deepening unrest in Hong Kong, where the international airport was closed to flights for several hours on Monday amid ongoing demonstrations. Surprise primary election results in Argentina, which resulted in a rout in the country's peso currency. Stocks and bonds have also added support. It's the risk-off in the market generated by events in Hong Kong and Argentina that is feeding demand for the yen, said Yukio Ishizuki, senior currency strategist at Daiwa. Speculators are increasing their long positions on the yen. There are really no signs of the yen's advance abating, Ishizuki added. The next target is the yen's high reached against the dollar early in January, but even that threshold won't present much of an obstacle at this rate. The Japanese currency has gained for the past 4 trading days against the greenback, a move beyond $104.10 this year's high scaled at the start of January will take the yen to its highest level since November of 2016. The shrinking spread between U.S. and Japanese yields has thrust the dollar yen into a downward descent despite recent bouts of global equity and market strength, said Junichi Ishikawa. U.S. Treasury yields have declined steadily on the back of global economic concerns and the prospect of the Fed cutting rates in the months ahead. The single currency has edged higher on Monday after Italian bond yields pulled back from 5-week highs on relief rating of Fitch. Longer-term prospects for the euro are grim, with the ECB expected to ease policy as early as September on lingering concerns towards Italy, whereas Deputy Prime Minister and right-wing party leader Matteo Salvini has called for early elections. The Aussie dollar has crawled up as the Chinese yuan found a bit of traction after the PBOC set a midpoint rate at a fresh 11-year low, but a level that was firmer than expected. So we do have some UK data coming up. I have to get I adjusted my clock on. I may have to reset everything. But anyway, that being said, so this is actually at the bottom of the hour. It should be 3:30 my time, it's showing 2:30. But anyway, that being said, that's going to be claimant count will be out in another little over 15 minutes. Then at the top of this next hour, we'll have the zoo numbers. They are expected to be minus 28.5 to go even lower than the prior one, which is 24.5. Okay, we do have coming into the states and NFIB business optimism index, and let's see here. And core CPI at 7:30 Eastern. Well, actually, for me, it's going to be 8:30 Eastern, 7:30 my time. CPI data. And into the next day would be Australian consumer confidence data. Move this out of the way. So let's go and get started with the bias chart. Well, just when the euro looks like it was going to advance, as I said, I thought I was going to have a tough time, on the backdrop of all that risk off yesterday to make that further advance. And we certainly did run into trouble at 1228. And we'll take a look here with support coming in here. Really appears to be fascinating around this 1181. It almost feels like just quickly you're going to see a quick dip. That's why I'm really, it would seem 1181, but it just feels like you could see this quick dip. They could flush out some longs and they end up holding. And with Boons being at all-time lows again, and we might have trapped some longs. They're not very much in water, but them that may have come in late, Let's say around 1208, 12.15, 12.20, thinking, okay, we're going to break out now. Maybe a bit underwater. I don't know if they could potentially push them lower. So I'll tell you what, we're going to go and keep the 11.52 here. And the only thing is we'll upgrade this to, which we had moved it when we talked with it, to 12.28. Things didn't save again. Okay, let's go move into cable. Well, cable's kind of holding its own here. I don't see any changes. I mean, we came up here to the bias chart resistance yesterday, poked our heads just above it, and we slid right back. So no changes here with cable. 1989 on the downside, 2094 on the upside. And once again, it's August trading. As I mentioned, European traders quite often take the last 3 weeks of August off. So we'll see slight activity. And really, you kind of think about it, I will say that the euro did a fine job of coming back. I was thinking that we could have dipped down to about 52 yesterday. And we did a fine job of popping up here, but I thought we could have, yesterday would have been an opportune time for the euro to go and break out, and it simply couldn't. But I can understand why it couldn't, because, as I said, with all the risk off that was going on, but nonetheless, we didn't even pop back above here, so we kind of rotated lower, certainly, with bond yields moving to new all-time lows again. Let's go and move into the Aussie dollar. We're just marking time here, holding here with the Aussie. And you can see really no changes whatsoever here with the Aussie. We had tightened it up here to 67.52, and the low was, I think it was 67.46 at the time. There's still a potential that we could slide even further back here, but the market's kind of holding its own here. I think we better move this down here to 67.28. Things continue to worsen. It's just going to open it to test even further low. It's just going to be 67.28. And on the upside, $67.91. It's not even that far away. It's going to be right there. Let's say we do see the dollar slip and then we get a little short cover. It's going to be 68.16. And onto the Kiwi. We'll stick with the 64.36, and on the upside, we'll stick with the 64.96. Let's go move into the dollar CAD. This 32 cents held up rather well. This was our buy chart support from Friday, and I thought there was still the opportunity that we could have got down to, I think we had this down here to potentially 31.78, I think it was, but we've actually held up rather well here. Let's go and move into the 2-hour chart. So support's going to be there at 32.08. We're allowed to goose it just a bit more. $32.78. 32.71 is a good key level, but I think we can punch it just a bit higher. Take out the highs right here. Go 32.78. Let's move into the dollar peso. Well, this market certainly looks like it wants to go in and punch up a higher. And tomorrow's the central bank meeting, and potentially they're going to cut. I'd hope we could dip. We may have dipped around that 1947, but no luck. And we're holding up here rather well. It's going to be 1972 for the resistance. Came right there, that 1953, right there. It's actually where it did plant support. Well, we're looking for a dip to 47. It's going to be 1953. Well, here's that 527. We're back. We're back here again, and at this point now, I think we have to make a lean towards the flash crash, though, which is 464. and the upside. This is going to be 567. And let's go move into the Dixie. Trading in fairly tight range. Let's go and move into the 2 hour. Boy, are we tight as a drum. Taking one more jump back up here, so on the safe side, we're going to keep this 97.89, and on the downside, well, that 97.30-ish area held. I mean, we got those 32 right there. I'm going to widen this down a little bit lower to 20. And with that, we'll go into the cross rates. And bear with me, I'm trying to get to the thing to change the screen. I don't know what's popping up on me, or not popping up. There we go. Well, there doesn't seem to be any reprieve here with the Kiwi yen, and it certainly looks like it wants to go and move lower. And I think this is where we have to end up looking towards the 67.17. We'll take a look here on the 2-hour chart. Jobless claims for UK rising to 28,000. Unemployment rate at 3.9 versus 3.8. Cable here at 2058. Not really a whole lot of response on that. And saying the jobless claims did improve from a month ago. If we do break here, I think we'll go down to the 67.17. I think really it's only a matter of time before they break, but we're still trying to defend this area here, so we're just putting the low right here at these most recent lows. We're trying to make a little bit of a stand here, but I think when we do break, we'll make a move down here to 67.17. I really think it's just only a matter of time when that happens. Looking here on the upside, we're going to keep the 68.29. And the euro peso continues to hug these lows here. This euro yen. Same thing. It just feels like it's only a matter of time before we break. We'll then head to the 1648. That's still a ways away. So let's go and take a look here on the 2-hour chart. We're just going to go with these lows right here. I mean, they're trying to hang on. 1752. 1810 will do the upside. And move on to the euro wallet. Euro just a slight easing here as the euro is more weaker than the Aussie. Um, and I think we can still weaken a bit because I think the euro is susceptible. But that being said, I think we eventually could push beyond these. It just won't be today or tomorrow. But I think we can still go up here, which is going to be 66.54. We kept it pretty tight, 65, 65. We can still eventually get up here. I'll go with that 66.25. And we're here, 64.73. And go with the Euro Kiwi now. I do want to go and keep this area here, the 74.33. Once again, we're not going to get there today or tomorrow, but I still think that's potential up there. Kept it pretty tight, but I want to go and go with that 74.33. I'll go 72.95. 72.95. And the LCN continues to be under pressure here. Right there. 71.01. I'm not going to give it that much room here. Just a little bit of a stretch here. 71.53. And moving to the guppy. Boy, is this hugging the lows. There's that secondary support we talked about, 26.54. That's going to be the support, 26.54. Still remains. And on the upside, 27.48. And with the sterling nod, Going to keep the 78.82 and on the downside. $77, $71. Okay, and we're still, like I said, it's going to be in a relatively tight range here in the euro. I still think that we're susceptible. We may do a quick slide where the dollar comes up here, takes out the stops, and same thing with the low euro on the way down, and bring it down to the 752. Obviously, the peso is going to be well on the bid ahead of that central bank meeting. And the yen just holding up just above here. We'll see if things kind of quiet down a little bit, but potentially, like I said, that low, that move to the 464 flash crash on the dollar yen is certainly possible. Well, that's what we got here. I'll go in and post this in the room, and we'll see you there. And thanks for joining us here on the European crossover.